Hello, everyone, and welcome into crushthestreet.com. What an incredible opportunity I have today to be speaking with Simon Dixon, an amazing authority in the crypto space, a pioneer, somebody who really struck while the iron was hot with crypto. And, we know we're in the very early stages of this massive boom we're seeing. And we're also in a very different time than what we saw during the massive historical bull run of 2017. Simon Dixon is the CEO and co-founder of online investment platform banktothefuture.com. And let's get right into it. Simon, thanks for coming on Crush the Street with me today.
Hey, Kenneth, I always take the opportunity. The last interview we did together, I think you drew out some of my best content and it got really good views. So I was really happy to come back again.
Hey, well, I appreciate you taking the time. And for just a little plug here, for a report that I wrote, if anyone wants to get my current thoughts on where we are in this brutal bear market, I will invite people to visit crushthestreet.com/crypto for this special report. But Simon, you are at the Satoshi Roundtable conference, and I'd like to kind of get your thoughts on where we are right now and get a pulse for the crypto market, because obviously things have changed and things have changed quite drastically. And if we look at the price of Bitcoin as a benchmark, we've been in this $3,000 trading range since November. And one of the things that I've told people is that the brutality of this bear market could go on for an extended period of time. A lot of pain, a lot of washing out needs to happen. But considering that you are just on the front lines of what is going on in so many ways, what are your thoughts on this?
So I think the last time we did our interview, Bitcoin was approaching about 9,000 on the way up to 20,000. And our discussion was on the economics of Bitcoin and how it is becoming a store of value and asset class. And so obviously now we're 1/3 of the price, but me personally, I have seen my $30 Bitcoin crash to $3. I've seen my $1,250 Bitcoin crash to $250, and I've seen my $20,000 Bitcoin crash to approximately $3,000 where we are today and wherever we go next. And one thing that seems to be an interesting observation is that in each time it seems the bear market is slightly longer, and with every longer bear market we tend to get a higher new high. And so just looking at while past performance is not really an indication of future, I fully expect my $100,000 Bitcoin to crash to $20,000 Bitcoin and have an extended bear market and whatever comes next on this journey towards creating this new store of value that sits outside the financial system. So that's kind of where we're at right now. As we said, you mentioned, I'm at the Satoshi Roundtable, which is where all the CEOs of the industries, people that are really building stuff. And the one major observation is that there's a lot of institutional players that are building for our industry right now. I know that it is Crush the Street, but the street is really decided that Bitcoin is something that they want to be a part of. And during this extended bull market, you can create a conspiracy theory if you wish, but it seems to me like the institutions are doing, billions and billions of OTC trades, accumulating as much Bitcoin as they can, because now it's NASDAQ's turn and the New York Stock Exchange turns and ICE's turn and every large stock exchange's turn to launch their crypto exchanges. And they want to make sure that they're on the right side of the trend before the new wave of institutional investor comes in. And we're seeing that with all the regulations and financial products that institutions are building. And so really the street is looking to be involved rather than get crushed.
Wow, that's a powerful statement there. Very interesting, Simon. And again, you're really in the thick of it on the front lines and seeing what has happened. Now, we've seen Bitcoin in just the last week or so, a couple weeks here, trickle down. I mean, it was at the $4,000 range, not that, not that we were calling it a bull market or anything, but people were starting to have a little more confidence in it after it bottomed out. But it's starting to fall again as of lately. And one of the latest news items was two over-the-counter trading desks, at Gemini were actually shut down. And Gemini, of course, is the crypto exchange founded by U.S. investors Cameron and Tyler Winklevoss. And they were closed without explanation over attempts to redeem GUSD, the company's stablecoin, first introduced in September. So this is very interesting, and I feel like it's very indicative of where we are. It's the very early stages of crypto, a very respected exchange, to have this sort of issue. That you really, I guess, wouldn't really hear that of Bank of America or Wells Fargo, or if you did, it would be such huge news that this happened. But Gemini is like, a very, very important place, a very important exchange in the market here. And here we are dealing with these very early stage bobbles, if you will. So what are some of your thoughts on this?
Yeah, and the crypto market never ceases to surprise me. Of all the years that I've been involved since speaking at that first Bitcoin conference in 2011, crypto has always thrown curveballs, and it's a very exciting industry to be with. But we also see some of the most, scammy and challenging processes being called into question as well. So what is most interesting is I remember, I think it was way back in 2012, 2013 or something, when Ripple was like really pushing itself as the compliant place for the cryptocurrency industry. And they were the one that actually got slapped with a massive FinCEN fine or a FINRA. I can't quite remember what it was. And now we're seeing the same with Gemini. If you're following this industry, you'll know that Gemini are just on the back of a ginormous campaign towards pushing compliance and regulatory, supervision for our industry. And then we see something like this, which is, I didn't even know this news yet. It's fresh, hot off the press today. But it really highlights a couple of things. The first is that the players that are actually trying to comply with traditional financial industries seem to be getting the highest level of scrutiny and challenges. And so the regulators don't want to be seen to discouraging compliance, but it's really creating this two-tiered market in our industry. The first market is the market for onboarding and taking your traditional fiat money and onboarding into the crypto sector. And when you're taking your traditional legacy fiat money and onboarding into the crypto sector, then you're going to, in 9 out of 10 cases, have to do that through a regulated institution or something that's not quite regulated yet, and take the risk while you're in that process at an exchange. And we're seeing that when you onboard from fiat to crypto, it means you have to take counterparty risk with your money. And in that process, you risk losing your funds because you're trying to onboard into the second type of industry, which is Bitcoin and crypto the way it was designed to be, which is where you can own your own money, you can spend your own money, and it has a monetary policy that exists outside of these financial institutions. The challenge is that most people are not comfortable with Bitcoin the way it was designed to be, and therefore they look for custodial solutions to allow traditional financial players or new fintech companies to store their crypto for them. And when you allow someone else to control your own money, it means it's just like the banking system. And if you remember on our last interview, we talked about when you deposit your money at the bank is the legal owner of that money. Well, when you deposit your money at Gemini Exchange, Gemini becomes the legal owner of that money. We talked about when the bank becomes the legal owner of that money, they can actually spend it as they choose. And the same is the exact same when you deposit it at exchange. What you're doing, and they can also rehypothecate it and create, artificial balances, whether that's legal or not, but they still can do it. And so therefore, this is an example of what happens when we recreate banking within the crypto industry. And so my observation of where this market goes from here is most people need to onboard, and they're not comfortable owning their own money, spending their own money, and understanding how to have self-sovereign freedom with their own financial affairs. Therefore, they onboard through a regulated financial institution, and that's an important industry for onboarding. But their job after that is to figure out as soon as possible how to actually store their own private keys and learn how to own their own money, spend their own money securely, and take back, the freedom and sovereignty that this industry actually provides to people. But that's a bit of a learning curve and an education that people need to go through. And so really that's the two-tiered market. And we're seeing massive innovation in both, like the innovation and the technical level of that we're seeing right now for scaling Bitcoin, allowing people to store them and use normal services like inheritance and multi-key management is really, really growing at a very fast pace right now. And at the same time, all of the traditional players are building custodial solutions and onboarding solutions compliant with regulations in order to onboard the next wave of institutional retail and everybody that wants to onboard into the crypto space.
All right. Well, that's interesting. And, I want to go back to what you said about the street onboarding to crypto and kind of tie it to governments here. What's the relationship between Bitcoin and crypto, for that matter, and governments going to look like? And is it going to need the marriage of the big money, the Wall Streets, the governments, and the people to come together to see these price targets of 100,000, 500,000, $1 million Bitcoin?
Well, I believe either way we're going to get there. It's just a question of how fast we get there. One of the most interesting thing about Bitcoin is that it's completely apolitical and it doesn't care who's using it. It really has no opinion about whether a government's using it, whether a company's using it, whether an individual is using it, or whether someone's using it for the proceeds of crime or not for the proceeds of crime, or just for self-sovereignty or everyday transactions. So when you create a completely neutral currency that has no political agenda other than to exist outside of politics, you create a very interesting scenario and lots of friction and lots of challenges, as we're seeing right now. Do we need institutional investors? Well, I believe that the financial system is in such a shaky state of affairs and such a shaky ground that we're either going to get one or two ways. Either the institutions create their own blockchains and onboard into this industry, and central banks and governments use the crypto industry to either create something like a Bitcoin standard, like Saifedean Ammous says in his book, The Bitcoin Standard, or central banks use blockchain, like we talked in our last interview, in order to actually bail out the system at the next financial systemic risk event. That is all very possible, and institutions will be in. The other alternative is that the financial system just implodes in its Ponzi scheme-like properties, and people then have the option of an exit from the traditional financial system. Now, although that might sound more desirable for someone that really believes in the ethos of Bitcoin, me personally, I know many people that would be very, very hurt by an implosion in the traditional financial system, and I wouldn't want that for so many people. And so I think that we're just inevitably going to move into this two-tiered world. The financial system will inevitably implode itself, and financial engineering that came from the Bitcoin experiment will be used to actually rescue the system at the same time as people being able to onboard and transact and own wealth outside of the traditional financial system. I think it's inevitable that these two will grow side by side. Will we need Wall Street in order to get there? No, you can either allow Wall Street to join us, or they can crumble on the side. But these are very, very entrenched interests, and my guess is that they'll adjust to the industry and they'll join us.
Simon, so one of the things that I want to ask you is the most important use case for crypto the monetary component? And maybe that's a softball part of the question, but what I'm trying to get at, I mean, beyond that, for some of these other cryptos, is the primary use case, a monetary component, and it's backed by, let's say, its practical use cases. Let's say like oil. Oil is used in cars, but we can, back money with it because it has a real life use case. So can some of these other cryptos, is it is monetary components the basis for all of these cryptos? That's my question.
It's actually a really good question that has confused a lot of people and continues to confuse people to this day. Um, if you're asking me the question, what is the best user case of crypto? The best user case, in my opinion, is the user case that will have the most impact in the world. And the use case that will have the most impact in the world is the creation of a sound monetary system that exists outside of the traditional financial system that allows you to earn your own money and spend your own money. As a counterculture to traditional finance that ends up almost regulating the regulator and traditional financial institutions because people have an exit, which creates the more honesty in cross-border, fiat payments. It creates more honesty in the entire system because they're competing with something in a genuine competitive environment. And we have the world's best shot at sound money. Now, just because I think that is the optimum use case doesn't mean that I don't think that blockchain and the crypto industry will also create disruption in every single area of traditional financial products. For example, Ethereum is at the moment having an impact in the capital markets. Now, is a blockchain that optimizes to be sound money? Does it have the same economic principles and technical structural formation as something to have disruption in capital markets? The answer is no. And so therefore, comparing something like Ethereum to Bitcoin is a futile task because they perform different functions, and it's comparing apples and pears. And so really the most important user case, I believe, is sound money. And if all we get out of this is the world's best shot at sound money, then I will be very satisfied. I personally believe there's a lot more to come as we take every asset class, we digitize it. We're working very much in the security token space at Bank to the Future, and we're investing in companies that are doing lots of different things around the industry. And I think they all become important, but my personal opinion is the sound money use case is the most important gift the world could give our financial industry and all of us.
Well, that's powerful. Simon, I want to ask you, are there any other crypto projects that have your attention at the moment? I know you've been primarily focused on Bitcoin, but are there any other ones out there that, pique your interest and that you're focused on to any degree?
Yeah, absolutely. As I mentioned, at banktothefuture.com, we invest across the industry. And we try to take a diversified approach to figuring out which areas are actually going to be the most impactful in our sector. Right now, the area that appears to be the most impactful and the next wave is disruption in capital markets and the securities token industry. So we've invested in Securitize, which is building security token protocol on top of Ethereum. We've also invested in Polymath. We've invested in many of the exchanges that are going to be building for security tokens. We've just launched our own wallet, which is built upon Ethereum for holding security tokens, the BF wallet. And we're really looking at investing across the different industries and infrastructures to build out disruption in capital markets through tokenization. Now, at the moment, that is all being built on top of Ethereum. That doesn't mean it will continue to. The other thing that we're really looking at is the Liquid network that is developed by Blockstream, who also created the Lightning Network. Now, I know these terms sound really geeky for the non-technical person, but essentially the Lightning Network allows for infinite scalability of transactions upon the Bitcoin blockchain. And the Liquid network allows for creating assets and tokens on the most secure Bitcoin blockchain. At the same time, I'm looking at the disruption. Blockchains like EOS are creating more centralized but much more scalable versions of smart contract platforms like Ethereum. And so really, we're just going to see which one is actually going to prevail. It seems like there will be public blockchain capital markets, but there's a massive amount of regulatory capture and crackdown in that. And therefore, it seems like a lot of these products are going to be more centralized. And if that is the case, maybe a more centralized blockchain like EOS is actually going to be able to achieve more of the optimizations and speed and efficiency over something like Ethereum. And then you've got people that are looking to compete in that as well. It's not just EOS on its own. So there's lots of interesting things that are coming out of this industry. And the one thing that I've learned is that anytime I think I'm really right about something in this sector, the crypto industry tends to throw a curveball and something else comes along. So it's very hard to navigate, but the types of things that we're looking at banktothefuture.com is firstly supporting the world's best shot at sound money through the infrastructure that supports Bitcoin, both on the regulated and decentralized way, and then also the capital markets disruption, and also looking at every other financial product that might be impacted as we move into the next layer of growth.
Well, Simon, I was going to ask you about how people can learn more about what you do and Bank to the Future, but you did mention some of that here. If there's anything else you want to add, though, to what you guys are doing and how people can reach out to you and learn more and partner with you guys, please add that. And if you would like, share some closing thoughts as we end this interview here.
Sure, yeah. So, banktothefuture.com is an online investment platform for investing in the future of finance. Because we are a securities business, we obviously can only work with a certain subset of net worth clients. But if you're building in anything in the future of finance, we'd love to see your application, see if we can get our investors to explore that. And if you're the equivalent of accredited investor in your country, then we also have 65,000 people investing in the future of finance. At the moment, we're very excited because we just launched our secondary market for trading equity in the largest Bitcoin companies. We're in beta, and people can trade Bitfinex SPV equity. And we're looking at bringing many more of the largest companies in our industry to that secondary market. And at the same time, I mentioned the BF wallet, which is a wallet for storing securities tokens as we move from the traditional equity market to the security token market. But aside from that, I tend to be most active on Twitter, and it's at Simon Dixon Twit. If you want to stay up to date with what's happening in this industry, my full-time job is to stay up to date with this industry, and I still can't catch up, and I can't keep up. So I really admire content creators like you that are bringing this content to people, because I think education is one of the most important parts of our industry that is moving so fast.
Well, that was great. Thank you so much, Simon, for coming on Crush the Street. And as I promised everyone, we are going to be bringing the best, the brightest minds to the table here in 2019. And Simon Dixon did not disappoint. Simon, thanks for coming on Crush the Street with us today.
Thanks, Kenneth.